Joining us now, Treasury Secretary Scott Bessent. Mr. Secretary, it's great to have you on, as it always is. Good to see you.
Morning, Joe.
Lead story, economy showing swagger as tariff fears ebb. This is the Wall Street Journal pointing out that there was quite a bit of angst and hand-wringing back in April. A lot of forecasts that the bottom was going to drop out, and just flatly stated here, and I know it might not be the favorite paper around the White House at this point, but they say, but that did not happen. And the economy is showing swagger now. But, Mr. Secretary, August 1st is a week from Friday, I think. And I think that's on everyone's mind. Any progress that you can report on some of our big trading partners?
Look, Joe, talks are moving along, but the important thing here is the quality of the deal, not the timing of the deals. And President Trump has created maximum leverage, as only he can do. And what we are seeing is like these imbalances built up over 20, 30, 40 years. And we are more concerned with high-quality deals than getting these deals done by August 1st. Our trading partners were told that the rates could boomerang back toward the April 2nd levels. We can continue talking then, but again, we're proceeding apace with the negotiations, but we're not going to rush for the sake of doing deals.
We talked specifically about a couple of the countries we're talking about, and I'll start with the Euro bloc. There was reportedly some messages sent to the EU that tariffs, the president's going to want more. He's going to want more than what the Euros had thought, maybe at 10% and maybe 15% or higher. There's word that they are preparing to retaliate or taking some tough action. But then Commerce Secretary Lutnick yesterday said he still thinks that there's room to maneuver and that there will be a deal. What are you feeling? 50% likely that there will be? I know you don't want to necessarily show the United States as him, but do you expect the deal to be done before August 1st with the Euros, or could it get ugly?
Well, Joe, it doesn't have to get ugly. It's the nature of a negotiation. There's a lot of back and forth. But I will tell you, as you know, I'm not an economist. I'm an economic historian. And the nature of deals like this is that we are the deficit country. So the surplus country will always feel it more. We have a gigantic trade deficit with the EU. And so with the level of tariffs, it will affect them more. So I would imagine that they would want to negotiate faster. They got out of the blocks in a slow pace. They've become more engaged. But as I've said many times, it's 27 different countries, and then you have the EU sitting up on top. So you have this supranational organization negotiating, and I do think that some of the underlying national governments are frustrated by the pace. But again, it's an EU negotiation, not a country-by-country negotiation.
Trying to handicap Japan, too, after the election over the weekend, Mr. Secretary. On the one hand, some people thought that he was the gentleman that has less, power at this point, that he was a sort of a difficult person to deal with. I thought that might make it more likely that a deal could be done with Japan. But there are others that say that the United States shouldn't be too tough on Japan because we need a stable partner, and they've got plenty of internal issues right now. What's your feeling on the developments of the weekend, how it affects negotiations with Japan?
Well, Joe, I arrived back from Osaka late last night, and I saw Prime Minister Shiba. I saw the trade negotiator Akazawa. We didn't talk about trade. I was there to represent the United States at the International Expo, and I can tell you the U.S. pavilion there is fantastic. So anyone who wants to go over and see it, it's what we used to call the World's Fair. And our our priorities are not the internal workings of the Japanese government. Our priorities are getting the best deal for the American people.
I've known the president a long time, and he always asks people for their opinion on things. I don't think it. I don't think that it would be criticism if he were to acknowledge that there would be criticism if he would to acknowledge that he asked you, what about firing Jay Powell, and you gave him your comments. And how much of this story is real? Is it in between? And I'm talking about the notion that you urged him not to fire Jay Powell, and he actually is obviously he's the president. He can do what he wants. But did you have a conversation?
Well, you know, Joe, I think the problem with stories like this is I'm not sure who the leaker was, but the problem with leakers is they only have partial information. And I think the other problem, too, is that newspapers like the Wall Street Journal are not used to a high-functioning executive president. They are used to, perhaps President Biden, perhaps President Obama, who was not as economically sophisticated as President Trump. President Trump solicits a whole range of opinions and then makes a decision. So he takes a lot of inputs, and at the end of the day, it's his decision, just as it was his decision on Iran. And look at the tremendous success there. Look at the tremendous success at the border. And that is what a great executive looks like.
Would you just offer up what your opinion would be on firing Jay Powell if the president were to do that? Do you think that would be a good idea, or would you dissuade him from that?
Look, Joe, I think that what we need to do is examine the entire Federal Reserve institution and whether they have been successful. I'm speaking, actually, I'm going to be in the building this evening. There is a regulatory conference that begins tomorrow. I'm the keynote speaker tonight talking about regulation. The Fed as well deals with monetary policy, regulations, financial stability. And again, I think that we should think, has the organization succeeded in its mission? If this were the FAA and we were having this many mistakes, we would go back and look at why has this happened? I mean, look at as you said at the top of this broadcast, there was fear mongering over tariffs, and thus far we have seen very little, if any, inflation. We've had great inflation numbers. So, I think this idea of them not being able to break out of a certain mindset, all these PhDs over there, I don't know what they do. This is like universal basic income for, academic economists.
Mr. Secretary, we had Elizabeth Warren on last week, and we asked her point blank what she thought would happen to the market if, in fact, Jay Powell was somehow ousted or pushed out or fired or something like that. She said she thought that the market would crash. What do you think?
I think Elizabeth Warren, Senator Warren, is entitled to her position, is entitled to her opinion. And I think that I'm not going to deal in hypotheticals. And, the Chair Powell's term ends in May. There's also another seat coming up in January. So, we'll see. And by the way, Senator Warren at times has been one of Chair Powell's harshest critics. So, it kind of amuses me that now she's taken the other side of the other side of the argument here.
Mr. Secretary, a couple of quick questions. First of all, I realize this is entirely up to the president to decide this, but do you think it's possible that the deadline for tariffs could be extended for countries where you feel like there are productive talks?
Again, Becky, we'll see what the president wants to do. But again, if we somehow boomerang back to the August 1st tariffs, I would think that a higher tariff level will put more pressure on those countries to come with better agreements. we just reached an agreement with Indonesia, and I saw 5 turns of their offers, and this started several months ago. I thought the first offer was very good. They came back, the offer kept getting better and better, and we ended up with a fantastic trade agreement. I think there was something, and don't quote me here, but I think there were 11,000 lines of tariffs that got taken out, including non-tariff barriers. We have a 19% tariff on them. They have 0 tariffs on us, and they are going to do a massive purchase of agriculture and Boeing airplanes. So that's what a good trade deal looks like, but there must have been 5 iterations of that.
We had the Ryanair CFO on today, speaking of Boeing airplanes, and he suggested that they're very hopeful on both sides that airplanes will get an exemption. Do you think that's likely?
Traditionally, there has been, so we'll see what happens there.
A lot of what we're doing, I guess, revolves around China on the trade front. We haven't heard anything new there. We have seen some rare earth exports pick up. Obviously, there was, I would say it's an olive branch that we gave to NVIDIA in terms of allowing China access to some of those chips. That would seem like that might induce China to maybe enter more seriously in the talks. What's the latest on China?
Joe, we're going to be engaging in talks in the very near future, and the talks are in a very good place. We had a meeting in Geneva, meeting in London, and I think trade is in a good place, and I think now we can start talking about other things. You know, the Chinese, unfortunately, are very large purchasers of sanctioned Iranian oil, sanctioned Russian oil. So we could start discussing that. We could also discuss the elephant in the room, which is this great rebalancing that the Chinese need to do. They have 30% of the world's export manufacturing, and that can't get any bigger, and it should probably shrink. And what the rest of the world is seeing is, now that we put up this tariff wall around China, China is not manufacturing any less. So those goods are going to Europe, Canada, Australia, into the global south and flooding those markets.
The president has seemed to take a dim view of the prospects for any progress with Russia and Ukraine. Are we now in the position to actually? Is there a plan for sanctions against Russia? When would that happen? Would that be near term? And you involved with that?
Well, Treasury leads the financial sanctions. Our OFAC division does that. But, Joe, in my mind, what's groundbreaking here is that the Senate, and I think there would be 80 or 90 senators who want to pass a sanctions bill, and President Trump has single-handedly changed the paradigm here, because included in that bill is we don't know what the deadline will be, whether it's 10, 30, 50 days, but any country who buys sanctioned Russian oil is going to be subject to up to 100% secondary tariffs. So now the United States Senate agrees with President Trump that tariffs are a means to political ends. And this is revolutionary. President Trump has changed the conversation here. And I would urge our European allies, who have talked a big game, to follow us if we implement these secondary tariffs.
Let's just sort of end, and I know you got to run. But we made the point with Speaker Johnson that in an economy that's doing very well, it's not typically thought that you should cut interest rates. So the more that the Trump administration points out how strong the economy is, kind of undercuts the argument that lower rates are needed. I will put the caveat in that we're going to have Judy Shelton on, The Economist, a little later. she takes issue with the notion that that prosperity causes inflation, and she doesn't think it's a demand problem. She thinks it's a supply problem. Is that your take too? That a strong economy doesn't necessarily cause inflation?
Joe, I think you and I can look back to the 90s, and I think that's what the paradigm or the mental model for everyone should be here, because in the 90s we finally had the productivity growth kick in from the IT revolution, and I would say that we are on the cusp of that right now. I was out in Sun Valley last week for a day, met with a lot of the tech leaders, and they think that the AI revolution is coming much faster than they thought, could start kicking in as soon as the second quarter of 26. So we could go back to non-inflationary growth, and if the inflation numbers are low, then we should be cutting rates. And also think about the distributional impact here, because the housing market, which affects the majority of American households are locked out of owning homes, so a substantial decrease in rates would unlock the mortgage market.
Yeah. Did you see the Kevin Warsh last week? You probably, you got a real job, but he made some similar comments about AI maybe being the power of it for productivity not necessarily realized yet. Did you see that? And you think he'd make a good Fed chair?
Well, I didn't see what Kevin Warsh said, but I'm in regular touch with a lot of the Silicon Valley leaders. I am in regular touch with a lot of the business leaders, and I think this is going from concept to reality. And I think we are on the cusp of a productivity boom like we haven't seen that can really drive the economy. So the economy is accelerating. The one big beautiful bill is going to lead to a CapEx boom, which I think has been held back. I think companies necessarily had to wait until the bill was passed. So I would think in the third, fourth quarters, we're going to see that. And there is a chance that we could have this golden age of high growth, low inflation.
Wouldn't it be nice? All right, Mr. Secretary, thanks for all your time this morning. We appreciate it. Hope to see you again in the near future. Thanks.
Good to see you.